Do you feel lost trying to figure out what you should and should not do during times like this when there are fears of recession and inflation is at all-time high? Hey everyone, this is Nikhil here, aka your frugal investor, and welcome to my channel. In this video, I'm going to talk you through steps that you need to take during recession. If you haven't already watched the part 1 of this video, I would highly recommend watching that video by clicking on the I button on the top right corner, or I will also link it in the description below. The first step that you should take is save, save, and save. As per the recent personal income and spending data released by Bureau of Economic Analysis, they saw that personal spending in March of this year increased by 1.1% month over month, or 11% compared to the first 3 months of the last year. This increase in spending was primarily because of increase in inflation. As we saw, inflation peaked at 8.3% in April, which is at all-time high compared to the last 40 years as per the recent CPI data released last week. And we can definitely see that there was an increase in food prices, gas prices, used car, transportation, and medical services. And this increase in prices doesn't only affect the spending power of US consumer but also affect the ability to save money for future. As you can clearly see in this chart here, the personal saving rate peaked as the US went into COVID lockdown in March of 2020, and then it again peaked in early last year in fear of Delta wave. But this year it dropped drastically to 0.6% and is at all-time low compared to the last 10 years. So if this chart teaches us anything, then it would be a good time to start saving your money for any future needs. It's hard to put a number on how much you should save as it highly depends on your personal situation. But if you're a beginner and don't have any idea where to start, then I would suggest to at least have $2,000 in saving and at least 4 to 6 months in emergency fund, which would cover your monthly rent, utilities, food, and gas expenses in case you get laid off from your work. Alright, that takes me to my second point, which is pay off your debt. During times like this, when inflation is at all-time high and as Fed is looking to aggressively increase interest rate throughout this year, you should definitely stay away from debt. This is really serious, guys, and it needs to be addressed. As CNBC reported last week, US household debt almost reached $16 trillion with a 1.7% increase in consumer debt and credit compared to the last 3 months of 2021. Student debt increased by 6.5% annually, and credit card balances were almost 9% higher compared to the same time last year. Ted Roseman, a senior analyst at creditcards.com, did say that there is a good chance that America's total credit card balance will soon reach a new record high. And as you might already be aware, the interest rates on these credit card balances can range from as low as 7% to as high as 22%. And in fact, the interest rates on credit cards are only going to head higher as Fed is trying to increase the interest rate to battle inflation. That being said, if you're carrying any credit card balance, do try calling your credit card issuer to ask for a lower rate and plan to pay off your debt as soon as possible. Alright, now that you have stashed some money in your savings account and also have some money in your emergency account and also have some good control over your debts, now is a good time to start investing. I know you might be thinking this guy is so stupid to recommend investing in this market, as major US indices are almost down 10 to 20% in the last few weeks, and there have been alarming signals from major banks and institution that recession is coming. Okay, first of all, I'm not an expert and none of this is financial advice. I'm here to just present what history has shown us and learn from it. I have mentioned this in my earlier video, but here is what we have learned from past recessions. There was a really good study published by Dow Wealth Management earlier this year that talks about how stocks perform before, during, and after recession. They took a look at 11 recessions from 1953 post-Korean War to 2020 COVID pandemic, and they saw that on an average, recession lasted for over 10 months. And even though the market was negative before and during the recession, they did see that 90% of the time market did recover in the following year by 16% and 20% in the 2 years after recession. By the way, you don't have to stick to this one particular study as it can be an outlier, but there have been multiple studies that are published in the past that suggest the same thing. I will try to link few of those studies in the description below. In fact, you don't have to take my words for it, but legendary investor Warren Buffett and techno king Elon Musk recommended the same thing. They both say that during times of inflation, investing in strong companies whose stocks are likely to stay consistent does make sense. And Warren Buffett further recommended investing in low-cost index funds which are less volatile but still take advantage of market growth. And because these funds hold every stock in an index, they are automatically diversified. So here are 3 of my favorite total stock market ETF where you will be able to cast a wider net with your investments. At number 1, we have VT VI, which is Vanguard Total Stock Market ETF. It's currently trading at $200 and they have in total $285 billion assets under management. They also pay out a dividend of 72 cents every quarter. They have major holdings in Microsoft, Apple, Amazon, Alphabet, Tesla, Facebook, Nvidia, JPM and Berkshire Hathaway. They have expense ratio of 0.03%, which is quite low. At number 2, we have VEA, Vanguard FTSE Developed Market ETF. And it's currently trading at $43 and they have in total $105 billion assets under management and they pay out a dividend of 20 cents every quarter. They have major holdings in Rogers and Spotify. They have expense ratio of 0.05%. And last on the list we have is VOO, Vanguard S&P 500 ETF, and it's currently trading at $369. They have in total $267 billion assets under management and they pay out a dividend of 1.5%, which is paid every quarter. They have major holdings in Microsoft, Apple, Amazon, Tesla, Alphabet, Meta and Nvidia. They have an expense ratio of 0.03%. And that's it for today, everyone. Please drop a like on this video if I did provide you any value today, and please consider subscribing to my channel, and see you in the next one.